$10 billion for finger clips. Danaher is spending like a first-year analyst with a corporate card now that the Supreme Court killed those global tariffs.
Oh, come on. Masimo isn't just finger clips, they own the acute care data layer. But I'll give you this. A 319% spike in Megadeals is completely wild.
The deal desert is officially a rainforest. Private equity is absolutely rabid right now.
Rabid buyers usually overpay. Let's see if the math on this Danaher premium actually makes sense. The rundown.
I am telling you that Supreme Court ruling was the starting gun. Boardrooms were completely paralyzed by the threat of unilateral global tariffs, and the second the court stripped that power away, you could hear the collective sigh of relief from Wall Street to Silicon Valley.
It definitely flipped the script. We are seeing hesitant executives turn into aggressive buyers almost overnight. Just look at Molson Coors. They just snapped up Atomic Brands.
The maker of Monaco Cocktails, I am not going to lie, I have definitely crushed a few of those on a corporate golf retreat. They are dangerous.
Your former banker is showing, Nate. But the math is entirely sober. That single acquisition instantly makes Molson a top 5 supplier in the ready-to-drink segment. It is a pure market share grab.
I love a good bolt-on. We are seeing the same aggression in defense tech. Sensofusion is expanding its counter-drone capabilities by buying Atol Aviation out of Finland, merging software with actual aircraft manufacturing.
Which fits the broader data perfectly. The industry consensus right now is that the M&A market has officially exited the deal desert. People are quoting this stat that private equity confidence has skyrocketed to 86%, supposedly the largest single-year sentiment shift in history.
Because the machine is finally working again, Maya. Look at Dawson Partners. They just successfully closed their GP Finance 2 fund at a hard cap of $750 million. Apollo funds are set to acquire Gatehouse Living in the UK. The deployment engine is absolutely roaring.
I do not buy the confidence narrative.
Oh, come on. A hard cap is a hard cap.
No, listen to the mechanics here. 86% confidence. That is actually 86% panic. They are sitting on a massive backlog of dry powder and their limited partners are screaming for returns. Apollo buying Gatehouse is not about profound market optimism. It is about the fact that they legally have to put that money to work. That is not confidence. That is a capital eviction notice.
You always look for the dark cloud inside the silver lining, but you cannot argue with the sheer scale of capital moving right now. Strategists are saying 40% of all deals closed in Q1 involved an AI-enabling component. Portfolio modernization is real.
Because slapping AI on a press release is the fastest way to justify a premium valuation. I read the footnotes on half those deals. The AI component is usually just a glorified chatbot integration.
Fair. But those premiums are creating massive waves regardless. Megadeals are up 319% year over year. We are seeing huge players aggressively pursuing scale.
Which brings us to the actual $10 billion elephant in the room.
Exactly. Danaher is swallowing Masimo whole, and we need to look at exactly how they structured that monster transaction to dominate the acute care market. The big one. $10 billion for patient monitors. I know hospitals overcharge for everything, but that is a massive check for Danaher to write.
Nearly $10 billion, let's be precise. But yes, Danaher swallowing Masimo is the ultimate signal that the M&A drought is over. We're looking at a 319% year-over-year surge in billion-dollar megadeals early this year.
319%. That's just wild. The floodgates are wide open.
Because the massive backlog of dry powder is finally catching fire. Private equity confidence is apparently up to 86%.
You know exactly what lit the match, though? It's that landmark Supreme Court ruling.
Stripping the executive branch's power to impose unilateral global tariffs.
Exactly. Dealmakers were totally paralyzed. You can't price a cross-border supply chain if a random tariff is going to blow up your financial model on a Tuesday. Now they have legal certainty. The script is flipped. Hesitant executives are suddenly acting like aggressive buyers.
Okay, but let's look at what Danaher actually bought. Masimo bulks up their diagnostics portfolio, sure. It solidifies their acute care footprint. But $10 billion? Masimo still has all that consumer audio baggage.
I think you're totally missing the core strategy here, Maya. Danaher doesn't care about the consumer side. They're buying a fortress in hospital tech.
I'm not missing the strategy, Nate. I'm looking at the reality of the integration. Masimo bought Sound United a few years ago. They make high-end speakers. You're telling me Danaher, a pure-play medical device giant, wants to be in the home theater business?
Obviously, they'll spin that off or sell it for parts. You're buying the hospital wing, and hey, you get a free surround sound system for the waiting room.
That's a terrible analogy, and you know it. Carving out that consumer audio division is going to be an absolute headache. I can already tell the footnotes on this deal are going to be a nightmare.
Spoken like a true journalist. Look, my former banker self sees this differently. You pay the premium because Masimo owns the pulse oximetry market. You lock down the acute care ecosystem. The speaker business is just a rounding error in a $10 billion transaction.
A very loud rounding error. But fine. Let's assume Danaher executes perfectly. They are part of this massive wave where acquirers are just desperate for scale and portfolio modernization.
40% of all deals closed in Q1 involved an AI enabling component. Everyone is trying to buy their way into the future.
Which brings us to where the really crazy premiums are hiding right now. If you think $10 billion for hardware is steep, wait until you see what buyers are willing to pay for vertical SaaS.
Oh, the niche software players. Defensible moats, massive margins, and every large cap acquirer wants a piece.
We are tracking some wild filings from buyers aggressively hunting for those exact AI capabilities, and we're going to tear into those numbers next. Voices.
86%. That's the new private equity confidence metric getting passed around this morning. Apparently, it's the single largest sentiment shift in industry B history.
Which just sounds like a totally fabricated metric to justify paying top dollar.
Look, the analysts are officially declaring we've exited the deal dessert. And honestly, I believe them. You've got that massive Supreme Court ruling stripping the executive branch of unilateral global tariff powers. Boardrooms finally have legal certainty. They're breathing a huge sigh of relief.
Certainty is doing a lot of heavy lifting there, Nate. I look at that 86% confidence stat and I just see panic. I see a mountain of dry powder burning a hole in their pockets. They have to deploy it or they stop collecting fees.
Always the cynic.
I'm just reading the data. Look at the other stat floating around. Strategists are claiming roughly 40% of all deals closed in the first quarter of 2026 had an, quote, AI-enabling component.
Right, portfolio modernization. You need an AI story to sell a deal today.
40%? Oh, come on. That just means bankers are taking standard software deals, slapping an AI sticker on page 3 of the pitch deck, and asking for an extra 2 turns of EBITDA.
Hey, if the market pays for the sticker, you sell the sticker. My old managing director would be proud, but you can't deny the environment has flipped. Buyers are aggressive again.
I'll admit the volume is back, but speaking of aggressive buyers and massive premiums, we need to talk about vertical SaaS.
Yes, we do. Niche software players with defensible moats are commanding insane multiples right now. Let's look at who's writing those checks next. Spill the tea. I am telling you, the group chats are entirely out of control today.
Oh, I believe it. You literally cannot find a sad private equity guy in Manhattan right now.
Exactly. That Supreme Court ruling stripping the executive branch of unilateral global tariffs, it completely broke the dam. Boardrooms went from hoarding cash to aggressive buying overnight. PE confidence is at 86%.
Which is the biggest one-year sentiment shift in history. But Nate, come on. Are we really pretending the tariff ruling is the only reason this deal desert is over?
You think it is just the massive backlog of dry powder?
I think it is the AI panic masking itself as strategy. Look at the Q1 numbers. 40% of all deals closed supposedly had an AI-enabling component.
Wait, really? 40%?
Yes. And it is complete nonsense. I read the press releases. It is pure corporate theater. Sensofusion buys a Finnish aircraft maker, Atol Aviation, and suddenly it is an AI synergy. Molson Coors buys Atomic Brands, the Monaco Cocktail people, and I am half expecting them to pitch it as a machine learning canned margarita.
Hey, do not disrespect the Monaco. That is a brilliant strategic play. Molson Coors is instantly a top 5 ready-to-drink supplier now. That is just smart alcohol distribution, Maya.
I am not mad at the cocktail deal. My point is everyone is slapping an AI label on standard portfolio modernization just to justify paying a premium.
I disagree. The premium is there because the legal certainty is back. The drought is genuinely over. Apollo is scooping up Gatehouse Living in the UK. Dawson Partners just hard capped their GP finance fund at $750 million. People are actually writing checks again because the rules of the game are clear.
They are writing checks, yes, but I want to see if these massive valuations hold up when we look at companies with actual defensible moats instead of just good buzzwords.
Which is exactly what we are tracking for tomorrow. Vertical SaaS is looking incredibly frothy right now, and we are watching the large cap acquirers to see who makes the next multi-billion-dollar move there. Tomorrow's radar. So tomorrow morning, I am refreshing Edgar at 6 a.m. looking for vertical SaaS filings. That Supreme Court ruling on global tariffs completely flipped the boardroom mood. The deal drought is over.
The drought was already ending, Nate. Private equity confidence hit 86% before the ruling even dropped. But I agree on the SaaS premiums. Buyers want defensible moats.
And AI. Don't forget the AI sprinkle. 40% of Q1 deals had an AI component. I guarantee half the bankers on Wall Street spent the weekend pasting AI-enabled onto their pitch decks.
Oh, come on. 40% is a garbage metric. If a target uses ChatGPT to write an email, analysts count it as an AI deal. I need to see actual tech integration.
Spoken like a true skeptic, but large cap acquirers don't care. They are terrified of being left behind. They will pay the premium just for the narrative.
Which means tomorrow's filings are going to be absolute fiction. I can't wait to read the footnotes.
Grab your red pen. We'll catch you next time.